Hi everyone. Today let's talk about where else we can put our money over the next 5 years instead of the S&P 500. The S&Ps have been really expensive recently. Let's see where else we can still put money to work without as much risk, in my opinion. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So where can we put some money over the next 5 years besides the S&Ps? We've talked about why the S&Ps are not a great move, at least for now. Let's see what they say. And just as a summary, they say we could see some times of high volatility, so looking for low beta stocks, tips, bonds, definitely interesting. I've been talking about that for a long time, but they also have some other kind of tertiary investments. Let's see what we can find there. And they say here, the S&Ps have been holding up really, really well. They are historically very expensive. We talked about that. So let's try to prepare our investment portfolios for some times of higher volatility, trying to find some low beta stocks. This is what we've been talking about for consumer staples. Staples have been doing really, really well recently. It seems like people are looking for those less volatile stocks. Utilities, also another one that could be doing well. I am also investing in REITs. I think REITs are a relatively low volatility stock, which have been doing pretty well recently as well. They also have high dividends, similar to utilities. These are stocks that do well in recessionary environments. Not all REITs do well in recession, but some of them do, and that's what I've been investing in. They also mentioned bonds. How long have we been talking about bonds? I've been a big proponent of bonds. I own a lot of them right now. Does that mean we need to go 0 to 5 year tips ETF? I would say probably not. I don't think that's necessarily the best place to be investing in bonds right now, but as an overall thesis, bonds, I definitely like them. I think they're undervalued. I think they're going to either continue to go higher or at least be profitable with dividends. Definitely a place to be. And then alternative investments with music royalty, carbon credits, wine, litigation, finance. Not super sure exactly how to get into all of these, but they do mention real estate here as a potential alternative. Been a big fan of that. Absolutely, you like to see that. They also don't offer anything else in terms of how to get into these other things. I've seen some wine investments. Maybe that's a place to be. And then you got commodities, of course. Gold, silver, energy. We've been talking about energy. Not a bad place to be. Energy's been pretty stable. You have good dividends there as well. So that's been good. Gold has been on a rocket ship move recently. Lots of people buying into those. Copper, cobalt, don't know those as much. We'll talk about oil today. I think that's in a place where you could be looking for a little bit of a bounce in oil. Gas, maybe. We'll see how that plays out, especially on the geopolitical stage. Definitely some risk there with Russia and Ukraine still going on, but definitely like the oil play, at least from here. Looking at Fear and Greed, we finished the week at a 35, down from a 44 the previous week. The close on the previous day there on Thursday was a 45, so we had a huge step down. All of that was pretty much on that Friday session, which was a big sell session. You can see here we were topping out in the zone, big sell on the Fear and Greed, and you can see extreme fear here on momentum as well as strength. Breadth almost in extreme fear already, but we've had a pretty decent rally here since mid-December to current levels. And so far, so good. We'll actually take a look at the 200, which actually did okay this week. And then looking at the put-call ratio, this was an extreme greed, and then we stepped into regular greed. I think this is going to continue up into that 0.7 area, most likely. Volatility, it's neutral here. I would argue it might be in a little bit of fear. Not sure exactly what their metric is for that, but it's pretty high at an 18.2. And then you can see extreme fear on safe haven, and even junk bonds spiking up a little bit, showing a little bit of fear there. Looking at the AAII survey, relatively unchanged from the previous. We did get a pretty wide expansion on the neutral, but remember this came out on Thursday. We did not see that kind of Friday priced into this, but the bulls extremely low still here, 28 to 29, stepped up less than 1%. The bears did come down a little bit, like I said, neutral expanding a little bit, but my guess is this will swing back down with the bearish price action we saw Friday, especially if we have any kind of follow through into next week. Like I said on the Friday video, I think we might see a little bit of a bump, but overall I would say bearish thesis, at least for now. Moving over to seasonality, you can see we've topped out for the month, and we are now in this pretty bearish period here towards the end of the month. The peak was supposed to be the 19th in your normal years, and that was pretty much what we saw. It did come just a little bit later on the Friday, being the 20th 21st, but overall bearish here through the end of the month seasonally. And then rounding out the calendar, you can see bearish for the Monday. That fits. End of February being down 15 of the last 26, so a little bit bearish there, especially after expiration week. And then you can see bullish for the one day on Wednesday. You do have a fair amount of data: consumer confidence, new home sales, durable goods, GDP for Q4 revised on the Thursday. That could be a little bit interesting. And then for the Friday, you have Chicago PMI as well as PCE data, and that is supposed to be a pretty bearish day there on Friday, down 60% or more of the time for the last 20 years. Moving over to earnings here just for a moment. You did get Berkshire on the Saturday. They crushed it. I don't know what happened there, but they surged more than like a tech company. Obviously, they're not a tech company, but look at that number there. Huge numbers, tons of cash on the balance sheet. Record high for them. I think it's $334 billion or so in cash. And then for this week, you do have Realty Income. That's a company that I do tend to watch. Domino's Pizza, do like to watch them as well. Still have Home Depot, Intuit out there, American Tower, another company I do watch. But the big one for the week is going to be the Wednesday. You have NVIDIA on Wednesday after hours, Salesforce after hours, TJX there in the pre-market, Lowe's pre-market. You have eBay after hours, fairly interesting. Agilent also after hours. Dollar Tree also coming out on the Wednesday. And then for Thursday, you got Dell. Dell is one of those kind of high flyer stocks. Want to see how they're doing. And then you got Autodesk, Monster Beverage, always fun to watch. Hormel Foods, one of those staples that's always interesting. And then you got Warner Brothers Media, definitely one to watch. And then you got Norwegian, another one of those kind of discretionary industries that's worth keeping an eye on. So still a fair amount of earnings this week. And then looking at the economic calendar, you have the 2-year note auction, CPI for the Eurozone on the Monday. Tuesday, you got consumer confidence like we talked about. 5-year note auction there as well. 7-year note auction for the Wednesday, new home sales like we talked about. Durable goods orders, GDP numbers, got some Fed speakers out there. That could be interesting. Want to see how they're doing. And then looking at Friday, PCE data, core in the headline number. Want to see how that's doing, especially after the hot CPI and PPI numbers that we saw on the previous reads. And then you do have Chicago PMI, Atlanta Fed GDP for Q1. Want to see that stay above the 2 number there as well. And then looking at the max pain numbers for the week, you can say it is actually pretty bullish across the week, even through the Friday here. So pretty decent for a little bit of upside, just like we talked about on that Friday video. Out through the 28th, actually pretty substantial. $10 for the Thursday, 1.6%, but then it's flattening out back here on the Friday. So see if we get kind of a rounding to the upside early in the session, early in the week. That is the expectation, at least for me. And then we're expecting this to kind of fall back into the current level, at least if not a little bit lower in my opinion. Moving over to the charts, starting off with the S&Ps here, you can see we did reject again from this level. So we came up to this 4 times at this point. We touched it here mid-December, early December, touched it again mid-January, couple of touches in between there, but we really came to it on that 10 February, touched it to start the week, pretty much held in that zone all week, and then we ended up closing down 1.6%. For me, this is still a topping pattern. You can see momentum on the weekly stepping back to bearish, not great there at all, and we did close at the bottom of the candle for the weekly chart. And then for levels, you got VWAP and the 9 EMA sitting right there at 6,003, 6,009, pretty much right where we're at. 6,013, we're right there. So waiting to see if this holds. You got the trend coming up into that area next week at 6,004. If it holds that level, maybe we're okay. 21 EMA is your next support to the downside, 59.49. And if we break through here, then there's a lot of downside potential. Got to extend out this trend line. That might be in play here. That level would be in here, 58.73. And then if we start to break down from this structure, then you're looking for these lower levels, 55 EMA, maybe as low as 55.71. Is it going to get there in 1 week? Probably not, but it could take a couple of weeks. So if it kind of trends up in here, that would be about 5% lower, maybe 57.30, 57.23, somewhere in there. And then extending out this trend line here, that would give you something around that same area, 57.50, somewhere in there. So first trend, if it breaks 59, 58.90, somewhere in there, 57.50 is your next zone. So that's what I'm looking for over the next couple of weeks. Is it going to do it in 1 week? I don't think so, but we've seen it before. Big down move, consolidate for a week, hold one more, big down move, go a little bit lower into that 57, and then we did bounce on that iteration. Is it going to continue this kind of grinding bullish price action? The momentum says probably not, but anything is possible. Always watch the price action. And then stepping over to my daily chart here, you can see there's a lot going on in this region. You can see we did have some slightly higher highs, did throw a big wick on this kind of rising wedge pattern, came down to this trend line here. If this daily level breaks, that's the 599.64 level. My next level is all the way down here at 591. Is there an intermediate level around 595? Probably, but I think there's just so much chop in here that it's probably not going to get respected. It's not impossible that we kind of hold in this zone 595, but like I said, bearish momentum, bearish RSI, huge volume, expecting this to sell. Doesn't mean we won't see a bounce from this trend, maybe rally up to this one here around 605.50 or so, and then you see this kind of break back down to that lower low. That would be something that would be a great trade setup and something I'm looking for at least this week. Moving over to the Tasty charts here just for a moment, you can see we missed that upper band, the second band here, that's at 622.82. We missed that level. We touched it here, retraced, missed it here. So for me, that is slowing momentum, looking for this to continue to roll down. We're below that 8 EMA. That was at 600.4, and we closed at 599.9. So expecting this to continue to roll. Volume weighted MACD says bearish. We didn't see any volume spikes on the weekly chart, which is interesting. But looking at that daily chart, we did get a pretty decent volume spike. We didn't hit the 2 threshold, but definitely registered on this indicator 1.58, so pretty decent spike. You don't usually see these kind of spikes in here. This is uncommon, and we did get follow through to the downside after those spikes. Is this going to have follow through? I think that it will, but for now you are in bullish conditions still on the daily chart with that ATR trailing stop at the 596.91 area. And again, I'm at least expecting that zone to get touched this week. Is it going to bounce from there? Still remains to be seen, but in the short term, I am looking for some more bearish movement. And then moving over to the NASDAQ, down 2.26 on the week. Tried to go smidgen higher, could not do it. You're coming down to the trend. That's at 21,537. For next week, that's going to be a little bit higher, 21,550. Is it going to hold that trend? Remains to be seen. You got VWAP in there as well at 21,449. And then you got the 21 EMA down there, 2170 or so. If we do pull back to that 21 EMA, that's going to be about another 2% lower potentially into that zone. Last time we touched it, we did bounce. We got a pretty substantial bounce from there. Are we going to come back into that zone? Seems likely to me. You can see momentum stepping back to bearish, RSI stepping back below the SMA. The volume wasn't huge on the NASDAQ like it was on the SPY where you had a huge ramp up in volume. The volume has kind of remained pretty high over the past couple of weeks. Really the past couple of years, the volume has been high. You can see more traditional volume down here in the 2 billion range, but more recently 4 to 6 billion has been kind of the volume we've been seeing. So not a huge volume spike relative to where we have been on volume, but either way, solid volume, bearish momentum. And then looking at that Q's chart here on the daily chart, you can see we hit that key level, held above it just briefly, broke back below it on the Thursday, gave you kind of a warning shot there. And then the Friday was the massive sell, over 2% in one day, broke all the levels here to 2650. My next level, 519.48, takes you all the way back to the levels we saw early February. That would be just about a full round trip for February. So we'll see. 55 EMA is in there as well, 523.16. That could be an interesting zone, but realistically, 519.48 is the level I'm looking for. Then moving over here to the Tasty charts for the Qs, you can see we're right back to that 8 EMA on the weekly. That's 524.64. We just barely missed it on the week. The low was 525.71, so we missed it by about $1. Are we going to touch it next week? I would say probably. Volume weighted MACD still says bearish. Not a ton of volume there on the weekly chart at least. And then flipping to that daily chart, you can see we did get into bullish conditions. We took out that trailing stop on the Monday, Tuesday, Wednesday, and then we got back below it here on the Friday. Is this an iteration where we flip to bullish conditions just for a moment and then we take out this stop? Seems like that's what's going to happen, at least in my opinion. And then once we take that out, you got the 89 EMA there at 513.64. We came into that zone before. That's where we bounced. My guess is we'll at least test that level. You can see the volume coming through on the daily chart. Volume weighted MACD, big step down. If that breaks, you still got the 144 down at 501.46. That's obviously a lot lower from current price. Are we going to get there in 1 week? I would say probably not, but are we going to hit the 89 EMA? I think that's certainly a possibility. Moving over to the Russell here on the weekly, down 3.62%. Big move there. 55 EMA is the target. That is at 214.62. That's also right around my next level, 214.79. We'll probably get above that level here next week, but either way, I think we're probably going to go at least a little bit lower. That will tap the low from the 13 January week. Momentum bearish RSI, big breakdown. We were below the SMA, trending below it. Now we got a breakdown from it. Not a huge amount of volume, but either way, still expecting at least a little bit more to the downside, similar to this here, where you get a big down week, slight extension, hit the level, and then you could see bounces. It's not impossible, but for now, 55 EMA is the target, 214.62, 214.79 is my level. And you can see what that looks like on the daily chart. We're below all the EMAs and SMAs, so that's not a great condition. Close below the 200. We did get below it just for a second here, 13 January, and then we bounced really aggressively there. If we don't bounce aggressively pretty quickly off of that 200, this is going to be pretty bearish. We haven't been below that 200 for any length of time, going all the way back here to November of 23 when we broke above it here and continued above it for a long time. Is this the point where we close below the 200? That is a huge metric that traders are watching, and a lot of traders are going to flip bearish if we close below it on a consistent basis. Moving over to the Tasty charts here, you can see that bearish week. You got the 55 EMA, same one we were watching, 215.16. It's actually a little bit higher on this chart. The candles close at a little bit different levels, so you get a little bit different levels for the EMAs, and then looking at your next one there, 89 at 208.69, trailing stop right now 206.4. So looking for that zone there. We haven't touched that in a while. We've been bullish conditions since back here in December. So far so good on that bullish move, but is this the point where it breaks? It's not impossible, and you can see definitely bearish conditions on the daily chart, huge volume coming through on the daily chart, almost hitting that lowest band. This is why I think we might see just a little bit of a bounce. We're getting close to those lower bands already. That's at 215.84 in here. Trailing stop right now, 230.44. If we come in, retest this zone here, maybe even the trailing stop, and then reject from there to that lowest area back into the like 212s. Maybe test this low here, 214.50, somewhere in there. That would really be the best trade. Is it going to pull back? We don't know yet. If it doesn't pull back, usually that means the move is going to be even more aggressive. Then moving over here to the Dow on the weekly chart, you can see big down week, 2.61%, just like everything else, right to the 21 EMA, right to the level, 432.78. The low of the week was 433.35, so we missed it by about 50 cents, but going to come into that zone, in my opinion. Momentum bearish, RSI bearish. Pretty clean double top. You can see clear top here, bunch of wicks to that level, rejected from there every time, and now you got a big confirmation down candle. So I would expect a couple of weeks of bearishness like this. So you got the down week here, at least one more, then you had a little bit of consolidation, then a second one here. You did go smidgen lower on those, but either way, continuing lower. 418 I think is in play. That's kind of your neckline at least. Does it hit that and then kind of bounce, maybe a slightly higher low consolidation in here, or does it straight up double top and then you get a bigger down move potentially? 55 EMA would be that first target, 408.02. Then you got some trend support in here, 413, my level 412, somewhere in this zone here as a potential support. But if this is a true double top and we take out that neckline, there should be a little bit more bearishness than even this zone here. So maybe as low as that 404 area, potentially taking you back to this kind of consolidation zone in here. Either way, everything looks pretty bearish after the Friday close. Moving over to the equal weighted S&Ps, you can see consolidation here. We did not actually break down below that consolidation on the Friday. We did get below 179.94. That was my level, closed below that. So momentum bearish, RSI bearish. Next level for me, 177.24. Is it going to continue down there? Certainly could. You could also argue high, lower high here. Come down and at least retest this previous low to at 173 or so, 55 EMA in there as well at 172. That'll trend up just a little bit. Somewhere in here, 172.30, 173 area. That would be my initial target, at least on the equal weighted S&Ps. Moving over to the ratios, we got the SPY actually massively outperforming this week. Huge breakout above the trend here. The Russell underperformed by a lot, so SPY breakout. We're very close to these highs here. Are we going to continue that 2.78 area? Seems like it's possible. Momentum bullish, RSI bullish. Seems like the SPY is the best place to be if you're going to be anywhere, which right now I would not be, but if you're going to be anywhere, it seems like the place to be. You got the NASDAQ SPY pulling back a little bit, trend support in here at 3.58 potentially in here. Is it going to break down further? Certainly a possibility. We went as low as 3.5 recently. Is it going to break back below that? Certainly a possibility as well. Markets are selling growth, and the best place to be out of these three is the SPY right now. Then looking at the SPY divided by the M2 money supply, you can see we are still in the same trading range between 27.25 and that 28.5 level. Never did touch that level. We rejected off of these trends here so far, looking bearish, momentum bearish, RSI bearish. Remember, this is still bubble territory. It's been a while since we talked about it, but the 22.05 level is kind of that peak level when it comes to zones where you can kind of top out at and still kind of hold levels. But right now you can see we haven't been above that for any length of time since the dot-com bubble. We are just as extended as those levels. I think we're going to come up a little bit short here, but that peak is all the way up at 32. Can we get that high? I would say probably not, but we're right near that consolidation high, right at the bottom of that consolidation high. Can it go higher? Absolutely. We can absolutely swing higher just a little bit, but markets are showing hesitation at the very least. And if we do get that kind of mean reversion style play, that's going to take you all the way back down here to that 22.05 level, which if it happens, that's at least a 20 to 21% down move. So just keep that in the back of your mind. Can we go that low? Absolutely. And I do think it will happen at some point. Moving over to the Mag 7. The Mag 7 was down 4% on the week. Absolutely massive. Took out the 9 and the VWAP 21 EMA as your next support down there at 307.9. Is it going to go there? That would take you about another 2% lower potentially. Is it going to hold the level 315.04? Certainly a possibility as well. But right now, momentum bearish, RSI big breakdown. We've been overbought. We had a high, lower high on the RSI, so you had divergence within this consolidation. Still have a low. We haven't taken out this consolidation low quite yet, but it does look a lot weaker here on that big Friday candle. That is the most bearish candle we've seen on this chart in a while. You can see 1.3 to the downside, 2.3 to the downside, all the way back here, almost 3%. Last time we saw something this big, it was back here, 4%, and we definitely got some follow through on that over the next 2 to 3 weeks. So are we going to see 2 to 3 more weeks of bearishness? It's absolutely a possibility. Let's extend this out just to give us a potential target on this trend. That would take you down to around the 301 area, maybe 303 area. If we did, that would give you about another 4.5%, maybe 4% lower. So 4 to 4.5% lower potentially in the next couple weeks. Moving over to Apple and Microsoft. Apple actually managed to stay positive on the week. So did Microsoft. So 95 cents to the upside and 60 cents to the upside respectively. Apple continues to look pretty good. Big up week, slight continuation. Expecting the trend touch here around 252 potentially. Momentum swinging to bullish. It is right below the SMA on the RSI. So does it reject from there? Potentially. It's another thing to watch. But then looking at Microsoft, this is a low. Looks like a wick retest, breakdown, momentum bearish, RSI bearish. Still looking at this to go about another 3.33% lower to that next zone. So much different thesis. Below all these short-term EMAs on the weekly chart, expecting this to ultimately link up with that 144. That's about 15.5% lower. Is it going to go there right away? Probably not, but are we getting some mean reversion? I think so. Moving over to NVIDIA and Tesla. Tesla was down 5%, NVIDIA 4%. Both of these look pretty bearish. Still looking at the trend as some support, momentum bearish, RSI still bearish here on the weekly charts. That trend support is around the 330.50 area. And then looking at NVIDIA, I think this is going to go down to that 130.50 area potentially. You got the 200 here as well at 125.83. Remember, NVIDIA has earnings. Will the earnings save NVIDIA? Maybe. Earnings has been a bit of a non-event over the last couple iterations for NVIDIA, so realistically, I would expect the price action to be king. Momentum right now bearish, RSI. If it breaks below the SMA, that's going to be quite bearish, so either needs to hold here on the retest, continuation higher, or if it cuts through here, I think we're probably headed back to this low here around 118 or so. And then looking at Tesla one more time, if that trend breaks, I just want to extend this out to give you a target. That would be somewhere around the 301 area, my level 301.93. Moving over to Meta and Broadcom, you can see Meta was down 7.2%. Huge week for Meta, especially considering we had 4 weeks in a row of bullishness, which was super aggressive. You can see this week in here was 6.4%, and now we pulled back 7.2%. Trend support in here, 679.80. We're pretty much right there already, 683.50. Momentum stepping down. My guess is this is going to break down. I would look for the 21 EMA realistically, which is quite a bit lower. That's 9.5% lower from current. Is it going to do it all in 1 week? Probably not. Is it actually going to revert back to that 21 EMA? Remains to be seen, but that would be my expectation. And then you got Broadcom here down 6.17%. Is it going to start to fill some of these gaps back to that 21 EMA? I think so. I think that's probably likely. That's 202.78. If we did get that move there, that would be about another 6.5 to 7% lower, somewhere in there. Momentum bearish, RSI bearish, everything says both of these should go a little bit lower, at least in the short term. Moving over to staples and discretionaries, big flip here. You can see staples continues to outperform massive, 1.95%, but you do have this trend line. So you have a high, lower high, marked a top here, created this trend line here, and we are right there once again. Is it going to break through there and continue to push to that 83.43 level potentially? Momentum right now, still super bullish. RSI, still super bullish. Nice volume over the last couple weeks. This has been bullish already for 6 weeks in a row, so it's definitely extended. Weekly chart, not super extended quite yet, but this can go on runs. You can see it here where you had basically 3 months of bullish price action topping out at that 84.50 level. For me, I think this is going to go. I think this is going to go back to that 84.50 level. I think it's going to continue to run here. Is it going to do it this week? Are we going to show maybe a touch rejection, higher low setup continuation through to that next level? That's certainly a possibility. I could see why you would be trading this as a short level. Just keep your stops really short if you're trading short off this level, because I certainly think there's an absolute possibility it just pushes right through here, especially with how much bearishness we're seeing across everything else, all of the growth stocks. Staples is the place where people are trying to find some value. And then looking at discretionaries, big sell, 3.79% below the 21 EMA, my level 215.06. We've been talking about that. And then looking at this level here for the trend, that's 212.61. The next one would be 213.30, somewhere in there. Momentum bearish, RSI bearish. I think this is at least going to go to the trend. Does it break through there? Obviously remains to be seen. Clear high, lower high setup with a low, expecting a pretty decently lower low. Then we'll see what happens after that. Moving over to wood and oil. It's been a little bit since we've talked about these, but you can see wood has kind of topped out for 3 weeks in a row, and now we're seeing a bit of a sell there. Close below the body of the previous candle. 9 EMA there, 78.32. I think wood is probably going to reject from here a little bit more. We had the huge volume come through around that 75 level, huge spike over the next 2 weeks. I would expect a higher low. Momentum is still bullish, maybe somewhere in here, 76.80. That would be something to watch for. You got the trend in here. Let's extend that out. That would take you down to somewhere around 77.4. Either way though, wood is selling. Interesting. Usually not great for the economy if wood is selling. And then you got oil also going down, but not much over the last 2 weeks. 1/3%, 0.5%. You had a huge spike here, hit the 200. Higher low setup potentially here. Momentum's kind of fading. RSI just below the SMA. If at higher lows here in this kind of 68 to 70 zone, I think is a possibility. I wanted to see this trend hold, but realistically it didn't happen. But either way, if we higher low, I think this could rally back to that 80 zone. And if it does, that is going to be bearish for markets. Markets do not like expensive energy costs. We had a huge spike, rejection. Is it going to hold here? I think that it will. Moving over to breadth, 50-day breadth, really little changed on the week. We're still in the same zone that we've been in, just 5% lower, 4.7% lower, right at the level, 52.81. So far, still looks like a topping pattern. So you came into the zone, rejection. Held the 9, came into the zone, starting to show rejection again. If we get a second rejection from this area, that's going to be quite bearish in my opinion. And then looking at the 20-day, also slightly bearish, not a whole lot, 5.8%. Really in the same zone it's been in, still just above this trend, still just below those EMAs. Momentum is actually fading here on the 20-day, and it is right at the RSI. You can see just barely below it. If it breaks through here, and the 50-day starts to fall back towards that 40 level, I think that is going to be a pretty bearish indicator. So far, breadth has held up well, but there are definitely some cracks that could break through to the downside in my opinion. Moving over to 200-day breadth, you can see also very, very little changed, just 0.68% to the downside. It's still right at that 200, still rejecting off of that 200. Momentum has been swinging to bullish, but it's slowing. It's starting to show a bit of an arc here. I think for me, this is still a zone of rejection at that 58.99 level. Realistically, if it rejects from there and we get back below the 50 level on 200-day breadth, back into negative breadth where there are more stocks below the 200 than there are above it, that's going to be a pretty bearish indicator. So far, we touched that zone here around the 49 area and bounced. Is it going to reject and cut much deeper down to like the 30s? I think that's certainly a possibility. Is it going to happen all in 1 week? Probably not. But so far, this continues to look like a dead cat bounce, rejection from just a very short support here. Touch the consolidation lows here, rejected, touch the 200. Looks like it's starting to reject, at least for me. Moving over to bonds, you can see 2 and 10-year bond yields continuing to trend down here. For me, this says there's not a ton of confidence in the economy. I think that the bond market is starting to suss out that the economy is slowing a little bit, and that's why we're starting to see yields sell off a little bit. Even with the hot inflation data that we got not too long ago, yields are still starting to roll over. That for me is a signal that there's something structural going on that we're not quite seeing yet. The bond market is sussing it out. Are we going to break through that 21 EMA on the 10-year and start to head back below that 4.25 area? We'll see. We got the 2-year auction. See where that comes in. Probably closer to 4%. Momentum swinging down, RSI swinging down. Seems like bond yields are starting to slow to the downside. I've heard people saying that the 10-year is supposed to go to 5%, but I just don't think that's going to happen. I think we've topped out, at least for the short term. 4.75 was a pretty good run. I think this is probably going to pull back to that 4.25 to 4.33 range, and then the 2-year probably pull back to that 3.75 to 4 range. Moving over to the dollar on the weekly chart, down just 0.14%, 21 EMA holding as support at 106.5. We're below my level though, 106.84. Interesting, right? So you got momentum bearish, RSI bearish. We're holding support at the 21, but we're stuck between the 21 and my level. And you got the highs back here from April. That's where we got this level in there. And then you got the consolidation highs back here from October. So zone of support, zone of resistance. So far, I think we're going to break down a little bit more. The next zone for me would be that 104.87 area, consolidation of the 55 and 144 EMAs. Then you got my level in between there at 105.5. So the dollar continues to show a little bit of weakness, continues to downtrend for multiple weeks in a row. Moving over to JNK and TLT, you can see both of these continue to hold up really, really well, even with markets selling off big time. JNK down just 5 cents, holding in the zone. It's been here for a while. 96.5 is the support, and then TLT up about 0.5% back above the 89.16 level. You got the 21 EMA as resistance there at 90.28. You got momentum bullish, RSI bullish. I still like bonds here. The support was 85.90, held that zone of support, rallied off of it. Is it going to double tap? Maybe. Is it going to pull back a little more? Maybe. We already did pretty much 2 weeks ago, pulled back to the 86.86 level and then bounced. So far, the 9 EMA has been support on the weekly chart. That's going to be the 87.78 level. So overall, still like bonds here, still holding at a slightly higher low. Still think this is going to go towards that 92.82 area. Moving over to volatility, big spike there, almost 24% towards that 18.5 level. Touch the level, touch the 200. Does it have another week in it? I think that it does. Momentum stepping to bullish, RSI stepping to bullish. I think we're probably going to go to this trend here around the 24.3 area, which means lower lows to come, in my opinion. So far, the VIX looks bullish. So we came in, we held the zone, bounced, held it again, bounced. I think there's more in it. We touched that trend last time. I think we're going to touch that trend at least one more time. Moving over to my accounts, I have basically no positions except for some treasury bills out here to May, but I lost like $7 on the day, I think. Last week I was at 135.552, so $6 on the week. You like to see it. $6 down when the markets were down over 1%. NASDAQ was down even more, so like to see it. Held basically flat on a down week. In terms of positions, like I said, I wanted to be bearish on the Friday, but I think we're a little extended. I think we might see a little bit of a bounce, But once we start to show rejection in an area, that's where I'm going to start to step into the bear side. I think we're going to see lower lows. Just like I talked about all video, I think lower lows are coming. But with the overextension, I wanted to be cautious. Maybe we see a slight bounce Monday, start to show a lower high, and then you start to step in back to the bear side. So for now, still bearish, but cautious for a short-term bullish bounce. Let me know down in the comments section what you think of those other plays. Are you looking at staples? Are you looking at bonds, REITs? What alternative investments are you looking at, and how are you getting into them? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.